single day. I'm gonna make something great. That's my way.
Hello everyone, and welcome back to my channel. I am Ginger Wolf, and this is Stripped Finance. I am a feature entertainer and stripper, not a financial consultant. So any and all information received from this channel is meant only for educational, informational, and entertainment purposes. So please, if you have any questions or concerns, take it up with your financial consultant. Now with that out of the way, let's enjoy today's video. Bye!
Hi everybody, welcome back to Stripped Finance. Today we are going to be doing bull markets. We have another Investopedia article, and I am wearing my money shirt. I do love this shirt though, it's fucking great. So, this article was written by Adam Hayes, and it was reviewed by Sierra Murray and fact-checked by Kristen Rohr-Schmidt. Pretty sure I pronounced that correctly. What is a bull market? A bull market is the condition of a financial market in which prices are rising or are expected to rise. The term bull market is most often used to refer to the stock market, but can be applied to anything that is traded, such as bonds, real estate, currencies, and commodities. Because prices of securities rise and fall essentially continuously during trading, the term bull market is typically reserved for extended periods in which a large portion of security prices are rising. Bull markets tend to last for months or even years. Scroll on down. Understanding bull markets. Bull markets are characterized by optimism, investor confidence, and expectations that strong results should continue for an extended period of time. It is difficult to predict consistently when the trends in the market might change. Part of the difficulty is that psychological effects and speculation may sometimes play a large role in the markets. There is no specific universal metric used to identify a bull market. Nonetheless, perhaps the most common definition of a bull market is a situation in which stock prices rise by 20% or more from recent lows. Since bull markets are difficult to predict, analysis can typically only recognize this phenomenon. After it has happened. A notable bull market in recent history was the period between 2003 and 2007. During this time, the S&P 500 increased by a significant margin after a previous decline. As the 2008 financial crisis took effect, major declines occurred again after the bull market run. Characteristics of a bull market. Bull markets generally take place when the economy is strengthening or when it is already strong. They tend to happen in line with strong gross domestic product and a drop in unemployment, and will often coincide with a rise in corporate profits. Investor confidence will also tend to climb throughout a bull market period. The overall demand for stocks will be positive along with the overall tone of the market. In addition, there will be a general increase in the amount of IPO activity during bull markets. Notably, some of the factors above are I don't know what's wrong with me, guys. I can't speak today. Notably, some of the factors above are more easily quantifiable than others. While corporate profits and unemployment are quantifiable, it can be more difficult to gauge the general tone of market commentary, for instance. Supply and demand for securities will seesaw. Supply will be weak while demand will be strong. Investors will be eager to buy securities while few will be willing to sell. In a bull market, investors are more willing to take part in the stock market in order to gain profits. What is a bull versus bear market? The opposite of a bull market is a bear market, which is characterized by falling prices and typically shrouded in pessimism. The commonly held belief about the origins of these terms suggests that the use of bull and bear to describe markets comes from the way the animals attack their opponents. A bull thrusts its horns up into the air while a bear swipes its paws downwards. These actions are metaphors for the movement of a market. If the trend is up, it's a bull market. If the trend is down, it's a bear market. Bull and bear markets often coincide with the economic cycle, which consists of 4 phases: expansion, peak, contraction, and trough. The onset of a bull market is often a leading indicator of economic expansion. Because public sentiment about future economic condition drives stocks prices, the market frequently rises even before broader economic measures, such as gross domestic product growth, and begins to tick up. Likewise, bear markets usually set in before economic contractions take hold. A look back at typical U.S. recession reveals a falling stock market several months ahead of the GDP decline. How to take advantage of a bull market. Buy and hold. One of the most basic strategies in investing is the process of buying a particular security and holding on to it, potentially to sell at a later date. This strategy necessarily involves confidence on the part of the investor. Why hold on to a security unless you expect it to rise? For this reason, the optimism that comes along with bull markets helps to fuel the buy and hold approach. Increased buy and hold. Increased buy and hold is a variation of the straightforward buy and hold strategy, and it involves additional risk. The premise behind the increased buy and hold approach is that an investor will continue to add to their holdings in a particular security so long as it continues to increase in price. One common method for increasing holdings suggests that an investor will buy an additional fixed quantity of shares for every increase in the stock price of a preset amount. Retracement additions. A retracement is a period in which the general trend of a security's price is reversed. Even during a bull market, it is unlikely that stock prices will only ascend. Rather, there are likely to be shorter periods of time in which small dips occur as well, even as the general trend continues upwards. Some investors watch for a retracement within a bull market and move to buy during these periods. The thinking behind this strategy is that presuming that the bull market continues, the price of the security in question will quickly move back up, retroactively providing the investor with a discounted purchase price. Full swing trading. Perhaps the most aggressive way of attempting to capitalize on a bull market is the process known as full swing trading. Investors utilize this strategy will take very active roles using short selling and other techniques to attempt to squeeze out maximum gains as shifts occur within the context of a larger bull market. Bull market example. The most prolific bull market in modern American history started at the end of the stagflation era in 1982 and concluded during the dot-com bust in 2000. During this secular bull market, a term that denotes a bull market lasting many years, the Dow Jones Industrial Average averaged 15% annual returns. The NASDAQ, a tech-heavy exchange, increased its value more than threefold between 1995 and 2000, rising from $755 to over $2,400. A protracted bear market followed the 1982 to 2000 bull market. From 2000 to 2009, the market struggled to establish footing and delivered average annual returns of 1.16%. However, 2009 saw the start of a more than 10-year bull market run. Analysts believe that the last bull market started on March 9, 2009, and was mainly led by an upswing in technology stocks. Why is it called a bull market when prices go up? The actual origin of the term bull is subject to debate. The terms bear for down markets and bull for up markets are thought by some to derive from the way in which each animal attacks its opponent. That is, a bull will thrust its horns up into the air while the bear will swipe down. These actions were related metaphorically to the movement of the market. If the trend was up, it was considered a bull market. If the trend was down, it was a bear market. Others point to Shakespeare's play, in which the reference to battles involving bulls and bears in Macbeth, the ill-fated titular character. Okay, I'm just sitting here. I'm trying not to laugh at that word. Titular. We're just gonna move on. Character says his enemies have tethered him to a stake, but bear-like I must fight the course. In Much Ado About Nothing, the bull is a savage but noble beast. Several other explanations also exist. Are we in a bull market as of 2022? That is a video for another day, for two reasons. One, this video is roughly about 11 minutes now, and that's a little long. And two, I'm sure that there's going to be some squabbling that come from this, so we're going to save that for a whole nother video. So I'll see you next time. Bye!
Hey guys! Congratulations on making it this far in the video. So as you know, I am your financial gardener, right? And these are the beds that we are going to be planting your financial seeds. So like, subscribe, and I'll see you next time. Bye!